Good morning, and thank you for joining us. I'm Emily Farrimond, and I lead Baringa's work in climate and sustainability. And today I'm delighted to be joined by a knowledgeable panel of experts to discuss the topic of navigating sustainable retrofit in real estate. With us today, we have Jason Constable, Head of UK Real Estate at Barclays Corporate Bank, Ben Todd, Managing Director, Travis Perkins Managed Services, Katie Krelle, Head of UK Sustainable Asset Solutions at JLL, and Avinash Rajan, Proposition Director at TrustMark. Welcome to you all, and thank you for joining us. Before we begin, there's some housekeeping to get out of the way. So first of all, at the bottom of your screen, there are multiple tools you can use, so please do investigate those. The most important one from our perspective, however, is that if you have a question, you can submit it through the Q&A engagement tool. We are going to try and answer these during the event, but if a fuller answer is needed or we run out of time, it'll be answered later via email. The other point to note, events are a little bandwidth intensive, so if you close any unnecessary browsers, that'll help conserve your bandwidth, or possibly if you log off your VPN. So today, we're here to discuss our recently published report, which was commissioned by Barclays and undertaken by Baringa in collaboration with JLL, Travis Perkins and TrustMark. We'll run you through the key enablers to prepare your organisation for the future of real estate, decarbonise your assets, and navigate the complexity of the real estate ecosystem. A copy of the report we're discussing today and the slides are also available in the related content tool. So without further ado, I'm going to hand over to David Mackenzie from Baringa, and he was one of the lead authors of the report. He's going to talk about our research and findings, and then we'll have a Q&A with the panel.
Thank you, Emily, and good morning, everybody. So my name's David Mackenzie. I'm a director within Baringa, and I work principally within sort of supply chains on net zero and decarbonisation topics. And I have the privilege to talk about the report that we did publish, and as Emily said, in collaboration with Barclays, JLL, Travis Perkins and TrustMark, who hopefully we'll hear from later on actually in the webinar. It's probably worth also saying, as part of the report build, what we did was a big piece of market research where we went out and actually canvassed across 250 landlords, cross sectors, different sizes and organisation types, really to learn and gain some really rich insights on their challenges, some of the solutions, and the journeys that actually landlords have been going through. So we'll bring some of that to life over the next sort of 10 or 15 minutes, and then hopefully we can unpack that in some of the Q&A. So I will start. So within the report, first we talk, and worth setting a bit of backstory and context. So sustainability and the commercial real estate sector is quite a critical component of the wider UK task of decarbonisation. So it contributes around 17% of the total emissions, and best forecasts are that 80% of the current buildings that are in use today are still expected to be in use by 2050. So combine that with the changing and quite often actively evolving legislative and regulatory landscape, which is strengthening principally. The view, based on some of the research from JLL and others, is that around 70% of buildings will become non-compliant if no action is taken. We then combine that with an uptake that at the moment that is slower than what's needed, principally in the main about a third of the actual activity in the sustainable retrofit we need to be operating at to hit those levels. The emphasis here is that actually, we need to accelerate and we need to be more urgent. Beyond the kind of the urgency point, the other piece within the report that we do stress is that there is a wider strategic, commercial, and social rationale for going forward with a sustainable retrofit strategy, and that sort of has been highlighted through some of the work within this report, and highlighting that rental premiums typically are higher, so sort of north of 11% premiums that we've seen against rental premiums, and similarly into asset value, growing occupancy rates for sustainable properties, and from a tenancy perspective, recognizing that actually it can generate better well-being, air quality, operational efficiencies, and the wider sort of social benefit that comes from it. So as we kind of go through the next 10 minutes. So if I take us one slide on, within the report, we did a piece of work of mapping the wider kind of landscape of stakeholders that's needed to support sustainable retrofit. The call out is it's incredibly large, it's incredibly complex. There are multiple relationships, interactions, information flows, interdependencies that sort of exist, some indirect and some direct. And what our market research illuminated was that actually around 50% of landlords today have not yet engaged with retrofitting. So, and cited as really one of the top 5 reasons for that was the inherent complexity of navigating this stakeholder ecosystem. So it'd be great either in the Q&A, also in the panel session later, really to sort of maybe unpack some of those challenges around that stakeholder ecosystem and where and how best to navigate it as part of your own retrofit journey. We then, building on top of that research and taking some of the feedback from the interviews that we've taken, we've shaped up a kind of a framework of where we see most of the challenges and barriers emerging. So there are 5 kind of categories that we sort of outlined here. So regulatory and policy barriers. So essentially those obstacles created by laws, regulations, changes to policy or incentives that we've seen. There are challenges around financial barriers. So that could be access to funding. It could be the actual initial costs of the actual retrofit in the first instance, and kind of associated sort of challenges around that. We have supply chain issues, which are relating to availability of materials and labour, or access to contractors as well, as particularly as part of that. Operational challenges, which is engaging tenants, understanding differences in lease types and how to navigate through those components. And then overarching across all of those, really an underlying tone of gaps in knowledge and data, particularly around awareness and often understanding of really energy performance as a whole. So we sort of took this frame, and there is a lot more detail in the report that were worth reading through, but there was a top 5 kind of list that emerged from some of this research. So universally, not in a particular order, availability to funding was cited as a big challenge. Business scale, so not feeling large enough in order to navigate through sustainable retrofitting. Access to design or planning skills in order to work out what needs to be done. The supply chain challenges, so access to contractors and actually trying to navigate and plot that course. And then finally, securing the buy-in from all of the stakeholders and looping back to that point about the complexity of the ecosystem. The other piece we also learned from doing this is that actually these challenges do differ by sector and they are weighted different. So for example, occupier cooperation and financing and access to financing were more acute as challenges within the residential sector, whereas things like supply chain challenges were cited more often around kind of office and retail sectors. So there is some nuance in this, and obviously relates to the different sectors and the different challenges that we maybe see within those. And again, it'd be great to learn a bit more from everybody on this webinar, actually, if there are any specifics to worth calling out and your own experiences. We've then took those kind of blockers and challenges and really then started to talk to what are the enablers and the top enablers that we see as important as in going some way to addressing some of those challenges. So this is kind of aggregated from the feedback that we did in the market research, twinned with some of the expert inputs and kind of wider case studies and bringing that into frame. So 3 things to call out. Firstly, building a multi-year long-term strategic building plan, one that is holistic and views to look in and integrate sort of sustainability into a clear operational framework was a critical enabler as part of any sustainable retrofit journey that you're looking to go forward with. The tenets of that, we do unpack that in the report, but the tenets of that strategic business plan are setting clear goals and targets for sustainability, identifying the relevant regulatory compliance that's applicable, looking and considering the tenancy associated with those real estate pieces and the current maintenance plans that exist for buildings, assessing the market for the products, the solutions, the technologies that exist actually to drive a sustainable retrofit, and then taking all of that to create tailored solutions that are specific to that building that actually take the use of that building into account and shaping that into a communication plan and a reporting plan that can be used with your stakeholders. So lots more information in the report, but effectively, driving that and creating that plan is really step one. The second piece that we've called out is that seeking guidance and support. So two areas in particular that those that have gone on a sustainable retrofit journey cited. So firstly, it was around improving and increasing awareness and education for funding options and the pathways to funding. And then secondly, the learning and actually just the education around what are the sustainable improvement options available, and making sure that actually it's understood what the associated benefits of those solutions would be. And that's critical in terms of delivering and understanding what's the right sequence to tailor a plan for your building. And then thirdly, on this list, and actually was listed as our #1 ranked option to encourage greater uptake of sustainable retrofitting, which is better access to data, and then ultimately being data driven. So to realise really the outcomes of sustainable retrofitting, the importance of creating a clear baseline for your building, understanding the operational nuances of that, the use cases that you've got applied to that building, and then optimising your retrofit plan to that is the critical component that as I say, was our #1 takeaway from the research and the feedback that we got from those that have gone on this journey. And so I will wrap up before sort of handing over, just to sort of talk to some of those tenets. So as I say, retrofitting is essential and urgent, both to support net zero and obviously the UK's plans to 2050, but also, and quite importantly, minimising future asset risk as a key call out, and be good to understand that a bit more in the panel discussion. It drives strategic and commercial value through the rental premiums that we've talked about, the improved occupancy and improving social welfare. The focus around 3 enablers, that long-term plan, the sourcing, the specialist support, and being data-driven. So those 3 key tenets. And I think just an appreciation that this is a complex landscape. It is a complex area to navigate, and collaboration is a critical feature of that. So when we look at the underlying themes that have appeared in the case studies that we've listed in the report, collaboration really sits at the heart of a lot of that. And it's definitely something that is important as a group. How do we foster that and encourage that? And then finally, act now and not later. I think the emphasis that we're trying to land through this is actually starting the journey is important, and not shying away from addressing some of the immediate concerns, trying to minimise some of the future risk, and really getting on your journey of sustainable retrofitting if you haven't yet started. So thank you for your attention. Feel free to add questions into the Q&A as we chat through. We'll actually try and get those answered. But with that, I will hand back to Emily and lead us through the next segment.
Brilliant. Thank you, David. That was so interesting. So I'd now like to welcome our panellists to join us, and we're going to kick off with some questions. Now, as I mentioned earlier, and David also mentioned, please do add any questions that you might have to the chat, and we'll try and include those with our Q&A. So Jason, if I can turn to you first, and one of the key themes that David outlined was the fact that funding retrofits remains one of the biggest challenges for landlords. Now, how are financial institutions such as yourselves at Barclays shaping solutions to support the sector?
Thank you, and good morning, everybody. Thanks for the opportunity to be involved today. So, yeah, when I kind of consider that question, there's probably 4 key things that come to mind. The the first really is, as relationship bankers, we really need to understand the individual problem statements for each client. We have a real cross-section of clients, as you can imagine, within Barclays on the real estate and social housing front, and everybody's challenges and tasks that they need to get to are very different. So really having that deep understanding of the specifics is super important, because one size certainly doesn't fit all. So that's definitely something that we're working hard with our bankers to get under the skin of. Then somewhat inevitably, in stating the obvious, having some flexible and cheaper financing to help actually facilitate and execute on work plans. And again, I think, there's a lot of products such as green loans, sustainability linked loans, and so on and so forth. But again, one of the things that we've learned over the last couple of years is that, every client's needs are different, and therefore you're going to need to bespoke the solution to deal with that. So it may not be a traditional green loan that is the answer. It could well be, a recalibration of covenants for a period of time, maybe switching off some amortization that's in a loan structure for a period of time to really free up cash to allow landlords to invest in the work that's required on their estates. And then education and insight. So we've invested a lot in our bankers in terms of training materials and so on, and courses and so on and so forth. It's such a important topic. It's such a fast-moving topic. It's absolutely vital that we keep our bankers abreast of developments in this space and really get a deep understanding so they can have a proper quality conversation with their clients who may not have the benefit of that resource. Some of our larger clients have significant departments of people whose focus is purely around ESG and transition. Some of our smaller private clients just don't have that luxury, so our banks have got a really important part to play in that education piece. And then I think if I take it to a sort of broader institutional influence, then I think, Barclays and our peers, we run significant investments into advocacy reports, and this is a great example of that. We're very keen to help contribute to sharing and improving knowledge of this topic. But then clearly we also get asked for our views from consultation processes run by government and so on around initiatives and ways in which we think they can accelerate the driver of transition. So, I think we've got a part to play that really ranges from doing our bit as a large and influential organisation, but then also being very specific to individual client needs.
Fantastic. Thank you for sharing that. And it sounds like a nice little bit of systems thinking you've been doing there in terms of trying to think through how you can have the most impact. I guess, though, that there's a couple of different segments there, and I'm just keen to understand how the financial challenges differ, in particular between the commercial real estate and social housing sectors.
Yeah, and it's a really interesting point. So I think, for many of the conversations I have with some of our kind of commercial landlords and residential landlords are around the fact that there's probably two big things that always come out in conversation. One is the return on investment. As lenders into the commercial real estate space, we typically lend between 3 and 5 years, and clearly the payback for a lot of these works extends way beyond that. So that's an area that I think a lot of our commercial landlords sort of really grapple with. But then quite, bluntly, there's also clarity around regulation. I think, we're still, I think, as a sector, screaming out for more clarity and precise timing on regulatory impacts. Because again, without that clarity, our clients are less willing to commit the requisite plans to work if they feel there could be more time to get that done. But if I kind of move to the social housing space, it's clearly, a different challenge there. They have the same common issue around payback on investment. And really to try and help offset that, we've been thinking very creatively about ways in which we can provide longer duration lending solutions to our social housing clients, where there really is a pressing need for upping the pace on retrofit. And you may have seen that we quite recently announced a partnership with the National Wealth Fund, which was formerly the UKIB. And that really does enable us, with the benefit of a guarantee for a large proportion of facilities from the NWF, that allows us to actually extend 10 to 15-year loans into the social housing space, and that's landed really positively with our clients in that area, because it does really start to help them justify the kind of financial implications of the requisite amount that needs to invest with a much longer payback duration that matches the financing tenor as well. So that's a real positive step in the right direction. But I think the point was well made earlier, and I think it's common across both our commercial real estate clients and our social housing clients is our concerns around skill gaps and supply chain challenges around in terms of are the skills and the materials actually out there to actually do the work that's needed to be done across the sector. And again, I think that remains a key challenge that is, again, front and centre of all of our clients' minds.
Wonderful. Thank you for that. So, Katie, welcome and lovely to see you. First question for you. So with only 1% of the UK buildings retrofitted annually, which feels quite stark in terms of that, the number of houses that we're actually seeing move on the retrofitting, or homes seeing move on the retrofitting journey. From your perspective, what are the main barriers preventing the industry from accelerating at pace?
Yeah, hi there, thank you. I think we've already touched on the key ones. I think just to start on a slightly more positive note, we've seen a tremendous sort of transformation in the industry just in the last few years, and I would argue that actually there are less and less strategic barriers preventing us from moving forwards. As we've heard from Jason, there's far better access to funding. We're also seeing a JLL, demand from both investors but also tenants and occupiers who may have made their own commitments to things like science-based targets. And there's a huge amount more sort of knowledge in the industry about the topic. So a lot has changed, which is positive. I think we've talked about lack of standardisation in the industry and regulation. That, for me, that really is the sort of number one, break on the industry moving forwards. The carrots aren't enough on their own. We know the returns aren't always there, particularly for some of the regional areas, perhaps outside of London and so on. So we do need a bit more of the stick to sort of help level out the playing field. Things like the Net Zero Carbon Building Standard, which some of you may have heard of, is a great start. That's an initiative that's being led by the industry's experts and industry bodies to try to standardise things like energy and carbon targets for the industry, which is a great step forward. So we're really optimistic about that. And as you may know, EPCs are also going through consultation at the moment. So we'll await to see the outcome of that. But I think just that standardisation will really help sort of galvanise the wider market, and help them give them that guidance that they need. And you mentioned the complexity of the ecosystem. I mean, that really is a system challenge that we have in the industry. Real estate and construction has always been a siloed industry with lots of different actors. And essentially it needs collaboration, particularly between owners and tenants of buildings. But as I said earlier, we are seeing now occupiers and tenants being far more knowledgeable around the topic, far more demanding of what they expect in terms of ESG criteria for their space. So there is a shift happening. It's moving in the right direction, but it does need collaboration. Some of our institutional investor clients, our larger clients, are putting in place teams either internally or recruiting consultants specifically to oversee their decarbonisation plans, bringing in and managing all of their internal stakeholders. We do appreciate that not everybody has the luxury of finding this resource. So it is a challenge, but there definitely is movement happening.
Thank you, Katie. That's wonderful to hear that actually from your perspective, you are seeing things start to galvanise by the sounds of it and positive momentum.
Yeah.
Moving more into sort of your client's shoes, when they start to engage with yourselves at JLL around decarbonising their buildings, what are the biggest misconceptions that you find they have?
I would say two which spring to mind. First is cost. I think when you talk about decarbonisation, I think immediately, clients have an expectation that it's going to be a huge cost. If you plan, it's all about, I think we touched on it in the presentation, it's all about how you plan the improvements. It's really understanding the current performance of your building. Perhaps there might be some easy wins, and you could implement some short-term measures for either low cost or no cost in some instances. It's about optimizing what you have first of all, and you can see some easy wins straight away and see an impact. And then it's about planning the deeper retrofit interventions over time, in line with things like the life left in your building plant and building services and systems, so that you're optimizing the improvements for the building in terms of cost and the life that you've got left in your existing building, which also helps minimize things like the embodied carbon impact as well. So it's really about optimizing the plan in a sensible way, and then you'll see your marginal costs of those improvements coming down. Then I'd say a typical misconception we often hear is fabric first, which does make sense in some instances, particularly in a domestic setting. That's why we often hear people talking about insulation. The same doesn't always apply in commercial settings, particularly if a building isn't that old, say it's been built within the last 20 years or so. Really, the biggest impacts are usually in electrifying the building and in installing more energy efficient building systems. And often, as we know, improving or changing the building fabric can be hugely costly and very disruptive to any occupiers and tenants. So usually that is a last resort in a lot of cases, and we'll always try to advise the sort of biggest impact, minimal disruption and cost interventions first.
Fantastic. So it sounds like what you're saying actually is it's not as challenging as it might be portrayed from the outside. And actually, if you're in a relatively new building, so something about 20 years old, then it's just almost some technology upgrades to support with that decarbonisation. Fantastic. Thank you for sharing that. So Ben, if I can turn to you and hear some perspectives from Travis Perkins. So we saw in the report that supply chain constraints have been a major barrier to retrofitting. What steps has the construction sector taken to ensure a more reliable flow of sustainable materials, and what more needs to happen?
Thanks, Emily. Really interesting question. I'd start by trying to break down supply chain, and I think David's slide up front that looks at materials, labour, services, and I would say anything that sits kind of beneath the tenant or the contractor is part of that supply chain. I think there's a load of really good stuff happening in this space. One of the biggest challenges we see, and I completely agree with Katie's view, that we have started to see the dial move quite significantly, certainly over the last kind of 12, 18 months, as more and more people are taking on this challenge. But supply and demand is probably that biggest challenge. I think at the minute, a lot of certainly in the domestic space, and I agree the challenges in commercial are different, but in the domestic space, it's finding the right materials, and actually we're not seeing a huge amount of products being held up. So actually accessing the right materials from the right source we are capable of doing that. In the merchant space, we're not seeing a huge issue with getting hold of the right materials, but my nervousness is as we see retrofit accelerate, that could create a bigger and bigger problem as we move forward. So I think there are some challenges in that space, and assessing the right product, and I would put that progress over perfection in that bucket. There's lots of people looking for the perfect solution, and in some cases we're seeing that hold up because everyone's looking for, I'm not going to do anything until the technology has been developed further, and the reality is we can't wait any further anymore in that space. And then the other bit, and I think we've talked about this a few times, around what our definition of sustainable materials. Because in our world, that could go to efficient homes with low cost energy versus embodied carbon, etc., in the materials you put in. And I think it comes back to the point that was made earlier around what's the benefit case? What are we trying to achieve through retrofit? And in a lot of cases, the customers that we're talking to quite a bit in this space are still uncertain as to exactly what their end goal is, as to how do you balance off those two. But yeah, we are, I think there's more and more work being done on collaboration between, ourselves, looking at one-stop shops between us and some of the other merchants in the sector, how we make sure we've got a really well-defined retrofit basket of products to help customers navigate that landscape, and also working with the likes of the National Retrofit Hub to try and work on some of these challenges across industry to try and make sure we are collaborating wherever possible.
Fantastic. Thank you for sharing. Now, Katie talked a little bit about the fact that it doesn't need to be as disruptive or as costly as people might assume. How can landlords and contractors better integrate sustainable technologies and materials into their retrofit projects whilst managing the cost pressures they're under?
So, and I think Katie covered it a little bit as well. There's a little bit of, we refer to some of these as retrofit projects. And I think I'd like to break the mould of saying, well, actually, they're just projects. So we have quite a lot of social housing customers that will do kitchen refurbs and planned kitchen works, and they don't factor in the sustainable retrofit opportunities as they go through. So what we'll often find is they'll address problem one, and then there'll be a different team or a different funding stream that'll start tackling retrofit as a separate exercise. And you'll have heard lots of stuff in the press over the course of the last 2 years, understandably, around damp and mould. And a lot of people will go, well, I can either treat the damp and mould, but do they consider retrofit alongside that as a challenge, so that they're trying to kind of kill two birds with one stone to a certain degree? So I think there's a challenge within some of our customer sets where they will have one team looking after retrofit and another team looking after planned works or ongoing works. So, we're challenging them not to see retrofit in and of itself as a project, and trying to challenge every piece of work they do, be it private landlords or social landlords or the commercial developments, with retrofit or low energy efficient or high energy efficiency within their properties as the same challenge.
Lovely, thank you for sharing that. And then finally, over to you, Avinash. And I've got a question specifically around both customer trust and regulatory compliance. And the reason I ask that is we've seen a lot of noise in the media about topics such as the effectiveness of air source heat pumps. And yet we see in Norway 1 heat pump for every 3 people. So it's working in certain jurisdictions. Why can't we make it work here? So from your perspective, how can landlords and contractors ensure that they're meeting those highest retrofit standards, but also delivering the consumer trust that's necessary to decarbonise?
Thanks, Emily. That's if we had the simple answer to all of that, we would have done retrofit very quickly by now. Let me unpack that question in 3 ways, just to give some context. So TrustMark is the only government-endorsed quality scheme for anything to do with home improvements. And we come to this research and the support that we've done from a domestic retrofit angle and social housing retrofit angle. But many of the themes that we have seen there apply in the commercial real estate space as well. So David talked about data earlier on, and what we are seeing from the 800,000 homes that we have seen retrofit through the TrustMark quality oversight, and the 1.8 million odd measures that have been introduced into those homes, is the challenge around finding the right model for an individual property is dependent very much on what is appropriate for that property. So we talk about Fabric First, which was mentioned earlier. Fabric First is more around trying to understand what is appropriate for that property. And what might be appropriate for that property is insulation, but what might also be a low carbon energy efficient capability like an air source heat pump. One of the fundamental issues around the UK market is the focus of the differential pricing between gas and electricity. So while we talk about introducing more air source heat pumps, the challenge has typically been twofold. One is gas is cheaper than electricity still, and until that is fixed, there will always be a hesitancy towards trying to move to a technology that has got a higher running cost. And potentially the negative impact of that is if you haven't looked at the fabric of the house and put in an air source heat pump, in a house particularly, you might make your EPC in the current model worse than it was originally. So there's some system issues that need to be addressed. But in terms of the point that Ben was making, when we look at retrofit, I think the terminology of retrofit is not necessarily helpful in the way that we are trying to make significant change across the UK. There's about £41 billion of money spent on domestic home improvements. A proportion of that is going to be things that they do to the home in order to make them more energy efficient. I think that the more we move towards planned works, which then include an air source heat pump, for example, as part of a home improvement, the more likely it is to see you're more likely to see a greater uptake of that particular type of technology. But again, from a TrustMark perspective, we don't necessarily focus on specific technologies. All we're looking at is what is the right set of measures to address the objective that a commercial landlord, a social landlord, or a homeowner has for their property. And that will be different for different types of properties.
Fantastic. Thank you for sharing those perspectives. And just building on that, if I may. So for landlords who are hesitant about deep retrofits, what small high impact interventions would you recommend, or have you seen be very successful as a first step for them?
So again, going back to the fabric of the house, assessing what the fabric of the house might take into consideration, you might then say, well, if you're in a property that has got a EPC level of D, it might be, I'm not suggesting it's right always, but it might be that you need to change the light bulbs, and that might get you to a better EPC rating. So it could be as simple as things like changing light bulbs, or it might be as thick, or changing the windows if the windows have been are more than 20 years old. And you can find simple, low invasive approaches to help improve energy efficiency. As you go towards deep retrofit, those deep retrofit requires significant invasion of the property in terms of what changes need to take place. So I think if you can start with what's the simplest things you could do: insulation, changing light bulbs, potentially changing windows, which are sort of relatively low cost in comparison to a wider, deeper retrofit. You might have low intervention, low carbon measures like solar PV. So you could do that as part of if your objective is to reduce the amount of carbon usage and also reduce your electricity costs. So that's a model that you would do in terms of low intervention, low cost, potential low cost and low invasive approaches to doing retrofit. But in all that comes risks, and that's the main thing that every installer business needs to think about, and every funder needs to think about. If you're improving a house, but it actually potentially creates risk, you need to mitigate that risk. A classic example might be if, now that we are pushing towards solar, a lot more solar uptake, you have batteries that are being associated with the solar. You need to make sure that they are balanced correctly so it doesn't create a fire risk. So there are unintended consequences of driving towards scale retrofit if they're not in a particular plan appropriate for the home or for a property, a commercial property. It might create unintended risks, which need to be managed down.
Fantastic. Thank you for sharing that. And just a reminder, if you do have any questions, please, they are very welcome. We've got such a fantastic panel here today who will be delighted to provide answers. So please do post those and we'll do our best to respond. I just wanted to come back to you, if I may, though, Jason, with a couple of questions. So we're seeing green finance products gain momentum. Firstly, how can landlords and developers best position themselves to take advantage of these products?
Yeah, so I think this kind of dovetails nicely into a comment I made earlier around the need to bespoke. So I think what we do need to be careful of is feeling like you have to have a green loan or a sustainably linked loan. It needs to be badged as such in order to achieve what you're looking to do. As I mentioned before, we're trying to be a bit more creative around how we can give the financial flexibility to clients to allow them to get access to cash flows that they might not otherwise have done. And we have had situations where, we've allowed, clients to take parts of their portfolio dark, for want of a better description, to enable them to actually invest the requisite capex, but actually, that is at the, from a lender's perspective, that's at the impact of a negative impact on cash flow. However, you look through that and see the actual end value creation that's being achieved through that, and you kind of can get your head around giving that flexibility to clients to enable them to undertake the works without necessarily having to borrow more money, but just get access to cash that may have otherwise been used for amortization or paying down loans and so forth. So that in itself wouldn't necessarily scream out as a green loan, but actually it is achieving the same end objective. So I think for me, whether the product is labeled or otherwise, it's really key for the client to have that more detailed conversation with the client, with the banker, and really run through the detail of their business plan. I know that was mentioned earlier, and I can't underplay that. This is it's really important that you get very forensic around the way in which capex will be invested and over what time period, so that we can really fully understand that and factor that into the way we're thinking about financing solutions for you. So I think having that really clear dialogue, but not getting too, green loans and so on are clearly a big important step forward, but you can rely on broader, I think, creativity from the institutions to help provide additional solutions to complement those loans.
Fantastic. Thank you for elaborating there, Jason. And we've got a message. We've got a question actually that I think you're possibly best placed to answer. But other members of the panel really welcome to come in and share your perspectives. And it's essentially about. It's from Amandeep. So private equity and pension funds seem desperate to get into UK real estate, but it appears that we're not enabling that to happen at the speed and scale that it needs to. I suppose the question then is, kind of what are the financial vehicles that we need to create to enable more capital to flow, and how do we almost, I think the question is, monitor and understand the sustainable impact that those vehicles are having?
Look, I think it's a really good point. There is a lot of investment that is looking to be deployed into this space, particularly from private equity and pension funds. And we are seeing some traction. We have seen, operating models come to the fore where they're absolutely able to put money to work. But I think it's a very fair challenge to say that there's an opportunity to scale up there. And I think we talk about collaboration a lot. And I think it's really important that we find other ways of trying to kind of bring, people that have all got the same collective objectives and financial firepower to make a difference into different combined vehicles that will enable investment to be deployed more rapidly. Because I think we're seeing it in pockets, but I think it's probably to the point that's being made not being accessed quick enough. So I think the institutions in the sort of financing space. You know, we are a lot more collaborative now. We don't try and think we can solve these things in isolation. You know, we need to come together and really harness thought processes around how we can bring some of that capital together. So I think it's a really fair challenge. I think you'll see more of that kind of activity, certainly in the banking space.
Fantastic, thank you. And Katie, if I can turn to you again, we've had a big theme around data, and the fact that it's a crucial enabler for successful retrofitting. I guess from your perspective, what role does real-world energy performance data play in shaping retrofit plans, and how can landlords better gain access to that data and then use it effectively?
So firstly, there is lots you can do to get started at a more strategic level with limited data. So we see that a lot from, you know, a lot of our clients who come to us. They don't necessarily have perfect data coverage, and it's not a problem. You can still get started when you're setting a strategy at, say, a sort of portfolio, you know, property portfolio level. Where it gets really critical to have metered energy data is when you are needing to create plans for each specific building. And there's been some mention of it from the other panelists today, but really it's crucial to create a bespoke plan for each asset. And where the data, energy data, becomes really critical is identifying where there may be some of those opportunities to optimize the building as it currently stands. So, you know, are there issues with, you know, the building systems? Are there issues with the BMS, for example? Those easy wins, which I talked about, easy wins, sometimes you hear it being called low-hanging fruit. It's those easy, low-cost, sometimes no-cost measures that can be implemented in the short term to improve the asset and really see some, sometimes some quite significant, sometimes as much as sort of 30% energy reduction just for those measures in the short term. You really need metered energy data on the building to identify where some of those improvements can be made. And in terms of accessing that data, it's much easier now than it used to be. You know, the likes of Arb & Co and other similar companies who can obtain metered energy data from buildings on behalf of the building owners. You know, that makes life a lot easier for building owners. And, you know, it can be half-hourly data, which enables much more powerful and impactful decisions to be made and get some of those short-term results and impacts coming through.
Fantastic, thank you. And just one more, I think that's come through on the chat that you might be able to help us with, Katie. It's just around a perspective on the grant landscape to enable some support for both affordable housing and kind of the rest of the market.
I'm not aware, it's probably not my area of expertise, actually. I don't know if anybody else on the panel is better placed to answer.
Sorry, I guess there's the government grants which exist, the traditional the traditional grants that have existed for social housing providers, which is through the Social Housing Decarbonisation Fund, which is now called the Warm Homes, or the terminology is changing. And then there's the Eco4, which is available at an individual homeowner level, which is funded by the energy companies. So there are a range of grants that are available. There are also grants available for domestic use for changes to boiler systems. So there's the boiler upgrade scheme, which enables people to upgrade from a gas boiler to a air source heat pump. So there are a range of schemes that are available for individuals who qualify for that. Not necessarily, and so therefore the organisations and the individuals should look into what's available. A good place to go is TrustMark, or go to the government website to have access to that information.
Fantastic. Thank you for that, Avinash and Helen, I hope that answered your question. We can always post some more details on where to find that information as well in the follow-up. I just wanted to come back to you, Ben, and I think one of the key topics we've also talked about is essentially education and support. So from your perspective, what role do suppliers like Travis Perkins play in educating and supporting property owners and also contractors to adopt more sustainable building practices?
So, I suppose we've been doing it for a while. We do have the benefit of sitting quite nicely between thousands of customers and thousands of suppliers. So it isn't often that we see a lot of these challenges play back to us time and time again. And I suppose part of our role is to try and collaborate with those to try and get those shared learnings and then share them with the wider audience in order to help them understand how they would tackle some of the properties that they're trying to deal with. We work quite a lot with some of the various kind of CLC councils within construction to try and educate people as to how to find the courses, how to tackle those challenges. And I think from a skills perspective, there's loads of work being done in this space, but they will require retraining. And often it's an adaptation of what they do today rather than a complete retraining system that we go through. So we're fairly advanced with some of our training works that we can do to help people understand how they would tackle some of those properties, short of being able to do the assessments ourselves. So I think once they've got a clear plan, we can help them access the right materials and then put them in touch with the right manufacturers who've got that skill set around how to best use the technology and installation styles that they need to.
Lovely, fantastic, thank you. And Avinash, if I can come back to you. Now, clearly, TrustMark plays a key role in ensuring quality retrofits. What's your perspective on the role of certification and quality assurance, and how does that need to evolve in the realm of sustainable retrofitting?
So I think there's two parts to that question. The certification around being able to have the necessary skills to then do the work is a core and important part of what is required of a skilled workforce. I think over and above that, there is a competence element, in which for us is the most important factor. So if you can demonstrate that you have competence in the work that you're doing as an individual who is in the supply chain, then we believe that that will drive for better quality work that is undertaken in retrofit improvements. So I think for us, competence is the most important element. We see going forward the need to drive towards a more competent workforce. And I think there's a challenge here, which we've not really specifically touched on the report, but there is the average age of the small and micro business, the average age of the installer in the UK is circa early 50s, and they tend to, there's going to be a potential drop off in the number of people who are working in this industry. So unless we get more competent people coming through to take up that role, those roles that they've placed, we will get into a cycle of inability to have the right level of people to be able to do the work. So I think, to the point that Ben was making, the more we can drive people to be qualified and be interested in construction as a career, followed by demonstrating the competence, the more likely you are to build a workforce that will enable us to do the retrofit.
Fantastic, thank you. That's really helpful. I actually wanted to come back to you, Jason. You may or may not want to answer this question, but I'll ask it and we see where we get to. So, one of the questions on the chat that's come in is whether Barclays are looking to offer lower interest rates for high EPC properties. And I suppose the question's been framed in terms of that would be a huge incentive for some people to retrofit and also have the benefit of lower operating costs.
Yeah, sure. And look, it's a really fair question. I think the kind of green loan products that we and our peers offer generally do provide a recognition of the fact that it is either achieving higher EPCs or there are existing higher EPCs. So there's definitely, I think, an opportunity for the lenders to provide a financial incentive, and I think there is some of that available right now. I think we're always looking at ways in which we can continue to evolve our broader product set, and I think, yeah, all of the banks are probably in a very similar spot to ourselves insofar as we appreciate, you know, in order to drive more pace in this journey, we need to incentivize clients to do it, and one of those factors will be cost, and therefore we do have a part to play in that. So I think we do, as I say, as a collective set of lenders, we do provide a degree of financial incentive, but I would anticipate that we'll look to find ways of doing even more so, I would say, as we continue to get momentum in the transition journey.
Fantastic, Jason. Thank you for sharing. So I'm afraid we're nearly at time. I think we heard some really, really interesting insights today. And particularly the things that resonated for me is this is a multi-year, long-term journey. But equally, we need to be thoughtful about the fact that that journey doesn't start with huge difficulty. It can start with small interventions that are relatively low cost. I really love the fact we need to stop calling it retrofit, because it just feels like it's going to be hard and it's going to be really, really intrusive. So there's a branding point that we all need to lean into. And then I think the thing that was really, really helpful to understand is we know we need to work together. We know that this problem requires systemic change and system thinking, and that absolutely that's what everyone here is driving towards to support us in decarbonising our UK buildings. So all it remains for me to do is say a massive thank you to our panellists from Barclays, Travis Perkins, JLL and TrustMark. I'd also like to thank everyone who's attended today to talk about the topic of navigating sustainable retrofit in real estate. If you have any questions, do please get in contact with either myself, David Mackenzie, or I'm sure any of the panel would be happy to answer as well. Prior to the event, you'll receive a follow-up email with a couple of links, both to today's recording as well as the content shared. Many thanks for your time and goodbye.